this topic sounds a little bit boring until it becomes very real. Because what we are talking about here is, should you use your HELOC as an emergency fund? Now, full disclaimer, I think a lot of Americans, based on what I see, actually do. And why would that matter? Who am I, you might ask? Well, my name is Arjun Dingra. I am a mortgage vet of about 25 years, having seen a lot of different things in this industry, including the '08 market crash, where I saw lots of people use their home equity line as an emergency fund that wasn't really for anything that was an emergency. This ended up eating up their equity, leaving them with no cash to move forward into the next housing alternative that they probably were being faced with, and ultimately losing their homes and their family's wealth. I'm a contributor here for the Mortgage Reports and put out content here and share it with you guys as a resource for consumers that are interested in real estate, as well as real estate professionals, as to how to make smarter moves using a mortgage. So let's first get into what an emergency fund actually is and what is it used for. In my years of being a mortgage advisor, I tell people that you want to have anywhere between 3 and 6 months at a minimum of all of your monthly bills to be able to be covered so that you're not losing any sleep. So this would be rent, car payments, insurance, utilities, the mortgage, not eating out, not happy hours, not shopping, but just the bare minimum. Now, some Americans have a 12-month emergency fund, which is the most responsible, but I get that that is a stretch and that is a lot of money to save up. So if you're landing anywhere between 3 and 6 months, I think that's a safe and stable time, because you likely will have recovered, meaning that you figured out some way in which you'll be able to move forward financially after roughly 3 to 6 months. So that's my definition of an emergency fund. But what is it used for? Well, if somebody loses a job, if there is a medical emergency that's going to eat up a lot of cash in the way of immediate bills, or just unexpected life punches, maybe you have to start taking care of one of your parents, and at-home care or in-facility care is extremely expensive, and in many cases there isn't insurance to cover any of this. So planning for the unexpected is the foundation of creating a good emergency fund. So if people have HELOCs and they don't necessarily have the discipline to create an emergency fund, what's wrong with just using the HELOC? Why do people actually use it? Well, for starters, HELOCs just feel very available. They're accessible. Once you have it on the house, again, it's like a gigantic credit card. Using it is effortless. There's no friction for you deciding you need the money and actually getting the money. And sometimes cash just feels inefficient, which is why people will go to using their equity. But availability and accessibility, or basically just it being so easy, does not equal certainty, because at the end of the day, there are real risks involved with doing this. First is that banks will freeze lines, or freeze these actual lines of credit. Now, this happened a lot during the '08 market crash. If you had, let's just say for example, a $100,000 line of credit and you were only using about 50 of it, what banks started to do once they noticed that the market was turning and that people's ability to make money was evaporating quickly before their eyes, they would lower the actual line of credit and cap it now at 50. So instead of having an extra 50 that you could borrow or utilize, you now have nothing, and they would follow you all the way down as you paid off the line of credit. So that's the banks coming in and limiting it. Sometimes they would actually freeze it outright and just say you have to start paying it back with principal now. Rates can adjust really fast on these as well, and that can be a negative downside, because for most lines of credit, they are attached to the prime rate. And the prime rate, if you haven't been paying attention, is what moves every time the Fed decides to raise or cut interest rates. We happen to be in a cycle where they've done that a few times recently, and it's likely that they'll do it at least once or twice over the course of this next year. So just keep in mind that those rates do adjust fast. And the last thing is that you don't control the timing when it comes to this stuff. Okay, so now that we kind of know what the deal is with HELOCs and why people use them, let's now talk about who they're actually for. Well, for starters, dual income households are at the top of the list of people that either have a HELOC already or can easily apply for one. High earners, people with strong reserves, and basically low debt stress. These are the types of people that this strategy works the most for. So for those folks, having a HELOC to back up an emergency fund, totally okay. Now here's who should absolutely not be thinking this way. People who have variable income, meaning their income fluctuates constantly. Sometimes it's good, sometimes it's bad, sometimes it's non-existent. Those folks should never utilize a HELOC or think of one as an emergency fund. They should just have their emergency fund that they've saved with actual liquid cash that's available today and does not have to be paid back, and leave the HELOC alone. People that have high leverage, very tight budgets, and low margin for error should not utilize a HELOC as an emergency fund. So when it comes to emergency fund planning, there's a 3-bucket system that I like to follow. It's a combination of having cash, having a HELOC of some kind in place on that property, or perhaps it's another property that you own, and then of course having other investments. Maybe it's in stocks, mutual funds, cryptocurrency. So just remember that, guys, because emergency planning is not about convenience. It's absolutely about survivability. So hopefully you found this topic useful. Thank you guys for watching, and we'll catch you guys on the next one here with the Mortgage Reports.